Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see that gold market, not only actually the gold, but forex market, major currencies also are falling like the victim of the recent Fed minutes protocol. So it was really hawkish, and it suggested that Fed could act earlier and more aggressive than it was mentioned in the statement during the meeting. So that has made a really significant impact on the markets. Maybe the gold market stands not as strongly hurt as some other markets such as Forex and stock market, but still you can see that some impact stands here, and it tells us a few moments. First of all, that there's a recent pullback we probably have to treat as just retracement of this bearish reversal session. And this leads us to conclusion that probably we should get some extension of this initial reversal. So it means that really very highly probable that we could get some kind of the ABCD pattern in the intraday charts. So in general, this is not very well decisive for the gold, because to cancel longer term bullish context, market has taken out of these lows. But still, for a short term performance, this action might be really important. And this is also interesting is because we do not know numbers on the payroll. So once we will get the numbers, if they will be more or less positive, it just suggests that gold could drop more because it led Fed to act more freely. Since the overall situation in the economy stands positive, it is easier for the Fed to start raising rates and so on. So this is this moment that stands currently on the table. So it means that probably in the current situation we should not consider taking any new long position and wait for a deeper retracement. Besides, if you will take a look at interest rates, you could see what actually have triggered the collapse on the gold. It's rising on the interest rates yield. Once earlier we have started just with the 322 pattern. Later it has turned to butterfly with this sharp acceleration, and it means that rates should rise more because the nearest target stands at 180 area. It means that on the gold market in turn, the chances to get some downside extension stands really significant. So that's what we could say currently on the gold. On the speaking about the target, so if we'll take a look at the fall time frame chart, it seems that the situation with our 3 drive is confirming currently, and market is indeed probably will start dropping here, taking out of these lows, and maybe should taken out of these lows as well, because this is actually the minimum target of the 3 drive pattern. So the bottom between the second and third drive should be taken out. In this case, there's 2 moments to keep an eye on. First of all, 1795, which will be the OP of this ABCD pattern, and for the bulls, it will be just a gift if market will just stop around 1795 and turn up again. But I think that this is, well, not very probable situation. So more probable is the market will start dropping further, because initially, as you can see, everything was going really nice. So when we talked recently, until the Fed minutes have been released, gold shows very logical bullish performance. When it touches the confidence, starts upward action, almost is rising above the top and confirming our bullish conditions that we discussed yesterday, breaking the intraday confidence resistance. But external factor has changed the situation from top to bottom, and market collapsed right back down. So in this case, there's more chances that 18 area will be taken out, and well, minor chances exist that market stops 1795, but more probable that we will see market still at the deep retracement somewhere in the 1775, 1788. That will be the area that at the current situation seems, well, suitable to consider next opportunity to take the long position to see what will happen around this level. So more probable that we will get some kind of the ABCD pattern. In the current circumstances, when actually daily trend is turning bearish, for our time frame chart already stands bearish, although it stands right now at the support cluster, I would consider more or less riskless opportunity to go short. So, for example, on the hourly chart, we have nice thrusting downward action, and here it is possible to consider bread and butter trade. So, for example, the market will show the pullback somewhere to the 1808, 1810 area, so depending what the fib level you will take, either from this top or right from the starting of the thrust, you could use the fib levels as well. So this will be relatively safe opportunity to go short, because with a big chance, opportunity, you will get the chance to move stops to the break-even. So because market in the first touch of the fib level will show the minor pullback, that led us to move stops to the break-even, and then see what will happen. If market starts breaking this area, that's great. We will be aimed on the 1782, 1775 area as potential target. If not, market after minor drop here, minor drop, pullback minor drop starts upward action again, well, we will out at the break-even. So, but using the impulse of this drop, well, actually is a classical approach for trading, making the momentum trades, the bread and butter as an example. That's the only setup that we see currently. So we do not have any bullish context, we do not have reasons to go long by far. On the short side, it makes sense to consider some intraday trade and try to use this momentum that we have from the yesterday's drop. Take the short position if you would like to. If you're interested only with taking the long position in the gold, in this case, it would be better to wait for clarity what will happen around first here, and which is preferable, this is actually next area to consider as a potential area where we could get some bullish signs and maybe some chances to go long. That's the situation on the gold market.